We live in a time when trust has become the most important currency. Trust in governments, trust in banks, trust in financial products. But what happens when this trust is broken? Many investors believe they are on the safe side with a gold fund. But anyone who reads the fund documents quickly realizes this is not the same as physical gold. The preliminary documents quickly add up to over 100 pages, full of technical terms and abbreviations. Everything sounds very professional, but even specialist lawyers need time to decipher all the connections. And anyone being honest has to admit that not even artificial intelligence can automatically extract a clear thread from these hundreds of pages. But that's exactly the point. Behind the technical jargon are hard facts. A fund does not mean direct ownership. Investors don't hold bars in their hands. They only own shares on paper. And in the fund prospectus, there is no clear promise that you can always request physical delivery. In a serious situation, this means investors usually only get money back. But what is money worth? When a currency starts to falter, the costs can quickly add up to 1% per year. That sounds small, but over the years it eats away at your returns. There are both ETFs, or exchange-traded funds, and ETCs, so-called exchange-traded commodities. The main difference between gold ETFs and gold ETCs lies in the type of ownership and the securities involved. With a gold ETF, the investor owns a share of the fund and thus has a direct claim to the physical gold held by the fund. With a gold ETC, the issuer holds the physical gold, and the investor has a claim to the value of the gold in the form of debt securities. The funny thing about all this is that the providers advertise these as an easy way to invest in gold without having to buy or store physical gold. But that's exactly the crucial point when you want to own gold, that you actually have it physically. On top of that, there are additional risks that many people tend to ignore. Custody risk means that the gold is held at a bank. If something goes wrong there, be it insolvency, a mistake, or even fraud, the investor ultimately bears the risk. If the issuer goes bankrupt, the investment is lost. And finally, there is the legal risk. If laws change in Liechtenstein, Switzerland, or any other country, this can affect the fund structure, the redemption of shares, or even the tax treatment. And here is one of the biggest disadvantages of gold funds right away. In Austria, fund profits are subject to a capital gains tax of 27.5%, and this tax is automatically reported by the bank. Physical gold, on the other hand, can be sold completely tax-free after a holding period of 1 year. In practice, this advantage makes an enormous difference. Real gold is just something else. And the crucial question is, what happens when things get really serious? When the markets freeze, when banks close, and when currencies lose trust? In this situation, a fund might pay you the redemption price in cash. But those who own physical gold hold an asset that no one can devalue. It remains your property. It remains independent, untouchable, secure. That's why central banks, the super rich, and more private individuals are not investing in funds, but in physical gold. But even when it comes to ownership, the question arises, where should you store this gold? This is where the difference between simple storage and a professional system begins. With us at Goldvorsorge, you have access to a worldwide network of high-security vaults. We are represented at the most important trading hubs in the world: Frankfurt, Vienna, Budapest, Switzerland, Dubai, Singapore, and many more. The advantage is obvious. Your holdings remain flexible. If the situation in any country worsens, we learn about it early through our international information networks. At an early stage, we contact you, and together we organize the transfer of your gold to another secure vault. Your precious metals are 100% insured, documented, and independently audited twice a year. Silver can be purchased there tax-free, and after a holding period of 1 year, profits are income tax-free in many countries. And even when you're on the move, your gold remains liquid. Within a short time, the money is available in your account via Western Union or on your credit card account. Goldvorsorge is one of the largest precious metal dealers in Europe. We are independent from banks, debt-free, and we ourselves invest exclusively in precious metals. The truth is simple. Fund shares are a promise on paper. Physical gold is ownership. Funds can change, laws can change, banks can fail, but physical gold remains. And with a high security vault at Goldvorsorge, you keep not only your property, but also your freedom.